Welcome to Commercial Property Talk, the podcast where we explore the trends, challenges, and technologies shaping the world of commercial real estate. Today, I'm joined by two guests from Elders Real Estate. First, John Talbot, Head of Commercial Real Estate at Elders. John brings extensive experience across valuation, agency, and capital markets, and he's leading the Elders expansion into the commercial property sector. Also joining us is Scott Newton, Director and Head of Real Estate for Tasmania at Elders Hobart. Scott has spent over 35 years in the Tasmanian property market and previously served as State President of the Australian Property Institute. We'll be discussing how Elders is growing its commercial real estate offering and the strategy behind it, why more capital is flowing into regional markets, and taking a closer look at the Tasmanian commercial landscape, including the impact of the Elders brand and what's driving activity there. Let's get into it. John, Scott, great to have you both here.
Yeah, thanks, Gary.
Yeah, good to be with you.
I've got a lot of interesting areas to cover today, and we'll divide the time so we can understand both of your respective geographies. So, John, I'd like to start with you. So, can you give us a quick overview of your background and what attracted you to lead Elders drive into commercial real estate?
Yeah, thanks, Gary. We're certainly both been around for a long time, and I've known Scott for many, many years. So it's wonderful to have him now as a colleague. Which is terrific. But look, I've had 40 plus years of experience in my professional career, most of which was spent at one of the big international agencies, JLL, the old Jones Lang Wootton, Jones Lang LaSalle business, and I was with them for, as I say, 40 odd years in a variety of different areas, as you've touched on, from agency, capital markets, capital transactions, funds management, valuations and consulting, so a whole bunch of different things. Mainly in Sydney, and that's where I live now. Spent a couple of years in Melbourne through my career, and also did a stint overseas with that firm in the UK and in the US. So, I've got a lot of different experiences and a good breadth of expertise and knowledge across the commercial landscape. I finished up with them a couple of years ago, looking to kind of transition into some form of semi-retirement I had assumed. And then this opportunity at Elders came along, and I guess what attracted me to them and to this role is, it's a brand that is very familiar to me. I grew up in rural, regional New South Wales, so I know that brand pretty well. It's a great brand. It stands for a lot of, great expertise in particularly in the rural industry and rural and regional Australia. Mm-hmm. And I know, a number of their senior people. And so I guess for me, I was attracted to an opportunity to help them create a much bigger, more diverse commercial real estate platform using my experience and taking a wonderful brand and nuancing it, ever so slightly to make it resonate more in the world of commercial real estate, in my world. And so, I guess for me, it was just one of those great opportunities at my stage of my life and my career to really help create something that's pretty special. So, here I am.
Yeah. And Scott, you've also had a successful career in Tasmania. So talk us through some of the key highlights or achievements that stand out most for you.
Yeah, certainly, Gary. So by way of background, similar to John, came through the valuation profession and studied up in Sydney and returned to Tasmania back in the mid-'80s and worked with Knight Frank at the time as a valuer and spent a number of years with them before setting up an independent valuation practice with a colleague of mine. And we built that business over a sort of 15-year period to sort of be a fairly large player locally. I think we at one stage had 50 qualified valuers working in the business, and it gave us a fantastic insight, obviously, and breadth of market experience, if you like, and knowledge across the total market. We then became involved with Knight Frank, and we returned and was an own business, franchise business, and we effectively acquired that with the existing shareholders that were running the business at the time and merged both businesses. It was very successful, and it gave us a very wide, level of service across the whole property sector, both residential and commercial, both in vows and also in transactions. So we very much diversified the business. That then morphed into the valuation component, which is now the Optium valuation business, and they in fact acquired that side of the operation, and we then focused purely on the commercial and residential side of the agency business. And in 2024, more recently, we were approached by Elders, and we've made the change. And it's been a very positive transition across to, as John said, a household name in real estate across the country. So the takeaways from our point of view is that we've been able to and been forced to really diversify, I suppose, over my career across, the whole property sector, not just, in the valuation where we effectively started.
And I read as well that you spent some time working in London too. Was that also in the property sector?
Yeah, it was. Yeah, I had a year in London, in the
Okay.
agency, side of the industry, and so they got an interest in that transactional side.
Was that
And that
quite
experience.
different to the way that things work in Australia, or how did you find the experience differed being
Uh,
in the
yeah, no,
UK
look,
versus
it's
Australia?
very similar. I mean, valuers over there are referred to as chartered surveyors, so we all had similar qualifications. But yeah, no, there weren't a lot of, I mean, it was quite similar in terms of how they operate, and
Yeah.
Australians were well received, and certainly enjoyed the time.
What I'd like to do now is get into a little bit about the Elders business model and some of the recent strategic developments you've had. So if I can jump back to you for a moment, John. So
Mhm.
just tell us through Elders in commercial real estate today and the move towards servicing the commercial sector more. And
Mm.
what do you think is driving that? Is it about diversification? Is it just about more choice or moving away from more volatile markets like rural?
Yeah, look, I mean, like any business strategy, there are various elements to it, and one is not necessarily more important than the other. It's a whole bunch of business imperatives and business strategies that sort of have led us to looking at specifically our commercial real estate strategy and looking to grow it. I mean, I guess the first thing I'd say is that builders are no strangers to real estate per se. We've already got a very well established, well understood, well known real estate platform in the areas of what they call farmland, but in rural property. So, I guess the market would typically know Elders as being a very active and successful leading agent and broker when it comes to selling all things rural real estate. We've also got a very successful residential platform, both franchise and company owned, and pretty much in many locations around the country, both metropolitan and non-metropolitan locations. So certainly real estate is not a new thing for the Elders platform. And I guess real estate does represent a really good hedge against the volatility of other parts of the Elders platform, particularly in the rural services space, that is more weather dependent and is more
Mhm.
commodity price dependent. And therefore that, those sectors can be a little more volatile, whereas real estate, tends to be a more predictable, cyclical, no doubt, but a more predictable revenue stream for a business like us. And so I guess Elders' decision to go or to grow its real estate platform anyway is partly a diversification strategy, partly a strategy of ironing out some of the volatility in a business like ours. Real estate typically provides a really attractive return on investment, return on capital, more so than some other elements of our business. And so from a shareholder return perspective, real estate looks really quite attractive. And so I guess for me in the commercial space specifically, it really was around looking to grow a commercial business to have it provide a more meaningful contribution to the bottom line of our real estate business. It's obviously currently a significantly smaller platform than rural and residential.
Mhm.
And so the challenge and the opportunity really for me and my team is to, look to in a very targeted, disciplined way, grow our commercial real estate business in much the same way as we've seen our rural and residential business grow over time.
So this is a question for both of you really. So feel free to jump in however you want to. John, you mentioned rural being really part of the core of the Elders identity. Can you give us a high level understanding of how that business model actually works and
Mm,
how it supports the commercial side too? Because as you mentioned, extremely volatile market and very unpredictable. So
mm.
I'm really interested to learn how that actually works and how it supports other sectors within the business.
Yeah. So look, I might kick that one off if you like. Yeah, I think if you spoke to most people around the country, the economy, and you mentioned the word elders, they will typically automatically, you know, think about elders in a rural services context. We are a very big rural services one-stop shop platform, if you like, for our rural-based clients, be they primary producers or investors or participants in the kind of rural economy. And so elders have got, very active businesses nationally in things like, livestock trading, stock and station agency, rural merchandising, all things that farmers would need for their rural enterprises, be it fencing, sheep dip, chemicals, fertiliser, are commodities that are actively traded both in a retail sense and a wholesale sense by elders. They're involved in rural finance, involved in insurance. And so really all of the ongoing business needs for rural enterprises are services and commodities provided by elders. So that sort of, I guess, encapsulates sort of the broad involvement they have there. They've got a dedicated agronomy business.
Hmm.
They have up until recently had a dedicated beef feedlot business, which has recently been sold, but certainly that again represents very much the core of what elders are known for. And I guess when it comes to real estate, and that's one of the benefits of the elders platform, of course, is that many primary producers, farmers themselves have increasingly diversified investment strategies, and so they're looking to unlock some of their equity out of their core business of rural and farming into investing into things like real estate, be it residential real estate or commercial real estate. And I guess that's one of the synergistic benefits that we see at Elders, that many of the core clients that Elders have had in the rural space for many years are keen to see opportunities in investing into things like commercial property. And so our ability to be able to tap into those clients and offer them other services outside of their core rural requirements is we think a very, very strong differentiator for the Elders platform.
Yeah, absolutely. And is that model similar in the Tasmanian market as well, Scott? Or what are you
Yeah,
seeing that's similar or different?
yeah, absolutely. I mean, we've transacted just in the last sort of 6 months to a number of rural landowners for the reasons John's articulated, in order
Mhm.
for them to help diversify their asset base and increase yield. They have large, valuable assets that are low yielding. Commercial property gives that added advantage of a high yield, and their balance sheets are reasonably well capitalised, and they've got a lot of patient capital able to be leveraged off to then acquire, supporting income. So if they're affected by seasonal, um, you know, um, changes, unforeseen droughts and market impacts of commodity prices that they can't control, then the commercial real estate income flows allow that diversification,
Mm.
and it certainly mixes well. I think the other benefit that we've seen that the rural fraternity have identified, that it's a great succession planning vehicle as well, whereby you may have one or two of the siblings wanting to come back to the land, and then one or more wanting to go and pursue other interests. And it's very hard to split a farm and leave the balance being economic and viable for the remaining farmers. So, having off farm assets is certainly assisting in succession planning for them. So, yeah, in a roundabout way, the elders brand, if you like, and their access to this network has been extremely beneficial to us.
You mentioned some of the unpredictable aspects of rural, such as unforeseen droughts, commodity prices. I read in one of your market reports about how I think it was buyer trends towards active wear had caused a spike in demand for wool. Then you've got weather. So there's a lot of factors that are outside of your control. And I'm just curious to know what you can do from a business standpoint. I mean, is there anything you can do about the predictability, or is it literally just something that you just accept and say, well, we just have to ride the storm effectively?
Broadly, I guess the Elders strategy is one of both geographic as well as product type diversification. And so, Australia and very much the nature of our rural industry droughts will typically occur in different parts of the country at different times. And so I guess one of the benefits Elders has is that we've got a very strong rural network nationally. And so when things are doing well in WA, they may not be doing so well on the eastern seaboard and vice versa. So I think, its national network I guess, is somewhat of a hedge against that kind of, climatic volatility, if you like. And equally, the elders network in rural is across a whole range of different product types, from livestock to cropping, farming, agronomy, and everything in between. And so, again, if you look at the history of commodity fluctuations in Australia, wool might be doing well, but beef not so well, or lamb might be doing well, but the pork market's not doing so well. So again, the fact that elders really sit across all of the commodities nationally, I think, gives them a pretty good advantage when it comes to sort of trying to manage the agricultural volatility that's kind of built into the system anyway.
And certainly their strategy moving into real estate and commercial real estate is all that diversification play as well, away from the agri side of what is clearly a dominant position that they've got. But they also offer finance and insurance services as well as real estate.
You mentioned one-stop shop, which is a term your divisional CEO has also echoed. What does that actually look like in practice, and how far off are you from that goal?
Yeah, look, I mean, you certainly, ultimately you've got to be very respectful of your clients', preferences and desires and willingness to deal with, a range of providers. So it's always dangerous to assume that even though you've got the ability to offer a client a one-stop shop, that they, feel in any way forced into having to just deal with us. And so you've got to ensure that all of the services you provide your clients are viewed as being best in breed and best in class, right? But I think the fact that you can offer a multiplicity of services, both within property as well as on a broader context, to your clients under the one umbrella of Elders, I think this gives us a very, very strong competitive advantage, and gives us the ability to offer our clients, economies of scale and the ability to tap into opportunities that they may not get in dealing with a range of different providers, and particularly smaller niche providers. I mean, Elders is a very big business. We've got a lot of consistency in what we do and how we do it and where we do it. And I think that that can be beneficial to a client who is looking to utilise their very strong relationship with a big brand like Elders into opening up opportunities across a broad spectrum. So, that's always a work in progress, right? You don't want to take anything for granted, and it's important that whatever we do for our clients, however they touch us, they have a good experience in dealing with us, so that if they have a great experience in dealing with us in a real estate context, then they're more inclined to want to deal with our colleagues in the rural services space, or our colleagues in the insurance space, or our colleagues in the in the finance space. So it's really important that we all kind of fly the Elders flag as positively and as successfully as we can.
Yeah, absolutely. I mean, as we've articulated, I mean, the Elders brand is strong. It needs no introduction. We're in a regional locality, and it's probably where the Elders brand really comes into fore. And I think it's been demonstrated by our activities in the last sort of 2 years since we've been with Elders. Our sort of market share is growing, and our activity levels are really sort of very strong. And as I said, it's a brand that's exceptionally well suited to regional markets, and we see Tasmania, albeit Hobart is a capital city, but we really see it as a regional
Yeah.
market.
And let's talk a little bit more about regional markets and activity, because, and just jumping back to you, John, because you stated in April that transactions in regional Australia were around $10 billion in 2025, which is a 30% increase
Yep.
from the previous year. Are you seeing that trend continue in 2026, and what's driving that? Are regional markets, I guess, becoming seen as more of something of an untapped resource for investors with higher yields, or is it about risk reduction and moving away from, expensive capital cities where
Yeah.
The barriers to entry from an investment standpoint would be much higher purely because of the cost.
Yeah, look, I mean, and obviously, this year is still a work in progress, but broadly, we would see similar trend in 26 as we saw in 2025 in terms of the overall volume of regional transactions. It may not necessarily show the same spike that we saw year on year from 24 to 25, but I think the general trend line is a positive one when it comes to regional activity, that the activity is increasing. The size of the regional pie is increasing because, there is more economic activity now happening in the regions. There's more real estate development, there's more real estate investment. And so the overall size of the regional pie is increasing year on year. And, that was definitely one of the factors that attracted me to Elders, because I, increasingly was seeing the importance of regional real estate market, commercial real estate markets becoming a more critical factor in the overall investment mix for investors that has traditionally been very capital city focused, and that was my background. I live in Sydney. I've worked predominantly in the big capital city markets, both here and abroad, and you tend to kind of lose, you tend to lose focus and lose that visibility of how important the regional markets really are, and how important regional Australia really is for the national economy. I mean, since I've been on board, I've spent a lot more of my time travelling to the regions and assessing opportunities for our business in some of these large regional cities, and they are big cities and they're growing. And I guess one of the things we're seeing is that institutional and high net worth capital that has tended to focus on the big metropolitan markets, particularly Sydney, Melbourne, and Brisbane, have been finding it really hard to get themselves set, or finding it frustrating that there is so much competition for limited offerings, both domestically and offshore competition with capital coming in from overseas. And so that's led to yield compression. It's led to a lot of competition. It's led to a lot of unsatisfied and unhappy investors who miss out on offerings time and time again. And I guess what I'm seeing, and what I'm sure Scott's seeing as well, is a willingness by investors, larger investors, to start thinking about regional Australia as being a very legitimate place to park their money, because they can get a lot of the benefits of capital city investment, good quality assets, good tenants, good long-term lease covenants, and typically they'll get a much more attractive yield play. Cap rates, yields in commercial real estate can tend to be, 200 or 300 basis points higher than their capital city equivalents. And so when investors are kind of looking for good returns, particularly in a rising interest rate environment, then the regions can come into their own. And so particularly if you can choose a region that exhibits the same kind of characteristics of a big city, that is population growth, broadening economic base, lots of infrastructure, both public and private, coming into these areas, then all of a sudden the regions start to look pretty attractive. And so, I think that explains partly why the deal flow metrics have been increasing year on year.
Just for the benefit of our listeners, myself included, when you say regional cities, what are the specific areas that you're seeing most activity in right now?
Yeah, you try not to pick winners, right? But because you'll invariably be proven wrong. But certainly the sort of markets that excite us in our business, and have seen us do things in these markets, would be, typically, cities that are within reasonably close proximity of a major capital city anyway. And I'm focusing mainly here on the mainland, and Scotty can talk about Tassie, and so they're sort of almost peri-urban markets, places like Newcastle and the Hunter Valley, Wollongong and the Illawarra, southeast Queensland, Toowoomba. These are centres, increasingly big centres, that are within a couple of hours of a major city. They're markets that are really interesting to us. Cities like Toowoomba, Rockhampton, where we acquired a big agency late last year. These are all big cities. Places in Victoria like Bendigo and Ballarat and Geelong are all very, very big cities in their own right. So these are the sort of places on the mainland, at least, that we would like to have some sort of commercial real estate involvement in, if we don't already. And I suspect they'll be the sort of markets that investors will be probably most focused on, rather than the smaller country towns.
I've got some questions for you now, Scott. I'm interested to understand more about Tasmania as a geography and a marketplace. So to start with, you previously mentioned you were branded as Knight Frank. How has the changeover to Elders impacted the Tasmanian business that you run?
Yeah, interesting question. Yeah, so look, it's been very positive initially when we were approached by Elders, a little bit reluctant. No one likes change. And I think, in hindsight, it's certainly been a lot more seamless than what we could have imagined. And in fact, we've just come off a very strong end of financial year result and, being able to build our business strongly on the back of their brand. I mean, Elders, are a very strong regional brand. I mean, it's well suited, I should say, to our marketplace, given that we see all of Tassie is sort of a regional market. I think, if you asked any sort of Tasmanian who are Elders and what do they represent, most people would be able to answer it. So based on that, we've been able to overlay with the market share and the experience that we've had in other sectors, residential and also the commercial agency sector, and being able to sort of leverage off the benefits of both.
Tell me a little bit about the Tasmanian commercial real estate market specifically. How does that differ from the mainland, if anything? Like, are there differences you're seeing in terms of yields or growth or anything else that you're seeing out on the ground?
Yeah, so it is, as we've identified, a regional market, and as a result, generally high yields are achieved, which reflects the fact that there's probably less competition and less institutional capital trying to acquire our assets. I mean, during the, sort of the strong period of growth, sort of around the pandemic, we had institutional capital flowing into the state. And we've seen that certainly slowed now as, their mandates have diminished. But certainly there's less volatility in our market, and, it's a longer play. You don't have the opportunity of getting, sort of the boom and bust cycles. So I think that's been successful here have generally been in the market for a pretty long period of time.
I'm just trying to think of the right word to use here, but is there a sort of monopoly you find in the market? Because it's obviously quite small. Like, do you see a lot of the same players that you deal with if you're working on deals or just working with the team at Elders?
Yeah, certainly both. The major centres, or sort of the northwest coast, Launceston and then Hobart, are all dominated by a concentration of investors. There's probably half a dozen of really active players in each of those markets. And, over a period of time, they've become very comfortable and with the respective markets that they're active in and being able to consolidate. And we tend to find that we're dealing with, those same people repetitively. Yes.
Yeah.
Gary, I think the difference between the big city markets and the regional markets is typically a less available granular information and knowledge and data about some of the regional markets. Sydney, Melbourne, Brisbane are very well researched, both by the big agency groups. Have all got significant sort of research platforms that track, granular movements in those markets, and then property council and other industry bodies that do it very, very well. It's less done in the regional markets for obvious reasons. Those markets are just smaller. So available information for investors to make decisions and form views and assess historic trends and future growth prospects are more difficult. And I guess that's where, advisors like us come along, because we're in the market, where we are local, we're on the ground. Our local brokers and valuers understand how things happen, even if it's more opaque and less transparent. And so it just means the advice an investor needs to get is perhaps requiring sort of literally local people to help them through, where that's probably less necessary in a big city market because the information is so freely available.
I was doing a little bit of reading as well. Funnily enough, I've not actually been to Tasmania. It is on the list.
Yeah, you
But
must do that.
I was reading about how tourism is something that's quite strong at the moment. And although population growth is sort of modest, I'd say, are you seeing tourism as a major factor in driving commercial activity in Tasmania at the moment? Like, for example, accommodation and retail, hospitality, or are you finding that there are other factors that are more important?
Yeah, no, look, I think you've summarised it well. I think there's no doubt, sort of post-COVID, we had an influx from a population point of view, and we were, had a fairly strong growth period, which is now certainly a lot more subdued. We see, I think, Tassie is an attractive destination, particularly domestically and also internationally. But I mean, the tyranny of distance has been largely broken down in that we've got a large number of direct flights in and out of our state from most of the other major capitals now, and 2 new ships coming online on Bass Strait shortly. So the access into the state is certainly been improved significantly. And then, you've also got the benefit of, just the work from home and the whole revolution in the tech sector whereby, people are able to commute, work from home, 1 or 2 days a week and then commute into the larger cities. So all those lifestyle benefits, have stood Tassie in good stead. But in respect to tourism, there's an internationally acclaimed museum known as Mona, and more recently we've had some of Australia's highest ranked golf courses developed, along with an emerging whisky industry. So all those
Okay.
sort of areas have certainly, increased the appeal of the state as a investment opportunity, I suppose. And we've certainly seen capital flow in from, overseas. There's a prominent Singaporean developer that's built a number of fantastic hotels across the
Yeah.
state, which has been a great benefit.
Have you seen a lot of the workforce move from the mainland to Tasmania? Because I'd imagine the type of lifestyle they'd be able to have would be significantly better than living in a lot of the main cities which have just become horrendously expensive.
Yeah, absolutely. I mean, Tasmania's always been challenged with its youth leaving the state,
Okay.
in their 20s. And then we find that generally when they get to wanting to raise a family, and the big cities, have those challenges you've just referred to. So, you do see a lot of them now returning, and obviously the ability to have that flexible working approach does, support that expat returning, if you like. So
Yeah.
I think that will always be the case. I mean, Tasmania's just, got a wonderful lifestyle. I think we also always had a massive housing advantage too, in that our housing was significantly cheaper, but that's changed. I mean, generally speaking, things, housing isn't necessarily cheap in Tassie, but that's the case right across the country.
And can you share any sort of recent trends or deals that show why an investor should consider Tasmania over, say, a regional part of the mainland or even a capital city in Australia?
Yeah, I think some of the benefits are that, particularly if you look at the Hobart office market, it has the lowest vacancy rate in the country, and look, that's largely as a function of the lack of supply. So
Okay.
it's a demand led market. Nothing, given the cost of construction now, nothing really facilitates speculative development. So one needs pre commitment before anything is built. Hobart has got a large percentage of government and public sector occupancy. So roughly sort of broadly 70% of our total office stock is occupied by state, Commonwealth or local government organisations. So that brings a lot of stability, both in terms of regular salaries being paid into the economy, but also the ability to, occupy buildings for the longer term. The private sector is only reasonably small, broadly 30% of our total office occupancy, and it's dominated by, sort of the legal, accounting, insurance type, professionals. And the medicals are another large element, I suppose, of general commercial occupancy within the CBD. But, we don't have a strong banking or financial centre in Hobart. It's all pretty much now domiciled in Melbourne or Sydney.
Yeah. Do you think that will change, or do you think it's
No,
kind of
look, I don't think. I think, rationalisation and, there's a lot of roles of sort of, I suppose, left regional areas and being consolidated into the larger capital cities. So I think
yeah.
that is unlikely to change.
And a question for both of you. Um, what's your outlook for regional and Tasmanian commercial markets over the next 2 to 3 years and beyond?
Well, why don't you start off with Tassie, Scott?
Yeah, look, we're fairly confident that they'll remain buoyant. We've had some significant federal government changes to our property taxation legislation, particularly around the capital gains regime, which is focusing on residential property and their investors through the reduction in capital, or the increase in capital gains tax, I suppose, and the abolishment of negative gearing. So we see that, and we've already started to encounter increased inquiry for small commercial property, and we will anticipate that there will be a transition of sort of the small private investors' capital away from the residential sector, probably more into the commercial sector, which I think is positive from the commercial market's point of view. I think Tasmania and other regional markets across the country do offer attractive yields, which are slightly higher more generally than the larger capital cities. And I think if you're able to acquire sound assets well located with really strong performing tenants, then it's a wonderful opportunity that will continue to be appealing.
I think similar trend nationally, Gary. I mean, clearly we're living in a more volatile environment, uncertain economic times, and global political uncertainty. So that can be a double-edged sword when it comes to real estate investment in times of uncertainty, where you've got volatile equity markets and rising interest rate environment. Capital does tend to flow into real estate pretty consistently because it is that tangible bricks and mortar asset class. And so, my expectation would be, despite the sort of global and national economic uncertainty, that's generally a pretty positive thing for property relative to other asset classes. Now, that's not underscoring the importance of economic performance and tenants who are doing well and being able to pay their rent. And so there's certainly concerns by investors generally about the sort of economic prognosis over the next few years that will impact all asset classes, including real estate. But I think the overall trend is a good one. Again, linking it back to the regions, I think it really will see the regions come into their own in the next few years. I think as more capital looks to move in to regional locations from an economic perspective, from an infrastructure perspective, then I think that can only be a good thing for property investment. There's lots of talk these days, as we all know, about the housing crisis in places like Sydney and Melbourne. And I reckon that's going to act as a catalyst for more people to think about actually moving out of Sydney and Melbourne and moving to the regions as more and more job opportunities evolve. And I think that will become a circular argument. It'll become a snowball as more people move to the regions, taking up good jobs, well-paying jobs. That'll see more companies think about locating themselves in the regions. And those organisations will need more investment-grade commercial real estate in order for them to undertake their businesses. And so I think over the next 5, 10, 15 years, I think you'll see a lot more bigger regional cities start to compete for capital in the real estate sector, and I think that'll be a good thing for the country.
Scott, John, we are unfortunately out of time. So thank you for being here and telling us about yourselves and Elders.
Thanks for giving us the opportunity.
To our listeners, thank you for tuning in to Commercial Property Talk. If you enjoyed this episode, don't forget to subscribe for more conversations with leaders across commercial real estate. I'm Gary Clark. See you next time.